Hello, and in today's 1010, we are going to be carrying on with our business bootcamp. Now, for day 2, we're going to be moving on to sales and purchases. So we've already covered banks and petty cash, and now we're taking that next step and really going to have a review of our sales and purchases we have in place. We're going to start off with aged receivables, so your sales ledger, because this is usually the element which is, well, it's going to be the one that makes the biggest impact. So what we're going to look at first is whether or not there are any underlying issues with our existing aged receivables. Now, there normally isn't. Most people are usually up to date with their receivables, but if you use an external system to raise invoices, your accounting system may not quite be in sync. So there may potentially be an error or missing items.
We see that quite a lot, don't we?
Yeah, it does happen. So the point is to get everything from the external system into your accounting system so you can fully carry out all of your credit control. You may find this also if you use PayPal, because PayPal sales, sometimes it depends how you manage it, but sometimes people raise sales after the transaction's been done with PayPal. So it's just making sure you've got all of your relevant sales invoices in there.
Yeah, so some PayPal accounts are set up to issue receipts, aren't they? Which keeps the customer happy, particularly if they're a consumer customer, not a business customer. But then that sale isn't accounted for in the account system.
So next thing we'd also need to look at is whether or not you have an external system. Such as a Wix website. These may need to be manually transferred into the accounting system. There may not be an import option. So the main thing to check with that, if we are doing a manual import, is 1, that we're missing nothing, and 2, that we haven't duplicated anything. Now, with Xero, it will let you know if there's any duplicated sales invoices. It will basically say, this invoice has already been raised. With QuickBooks, I think it does have it on sales, but I don't think it has on purchases. But I will need to double check that just to make sure. But I'm pretty certain it has it on sales, where it also lets you know that you're importing duplicates. But the main question to ask with your sales process, if you do have an external system, is do you actually need the external system if you've got an accounting system which has fully invoiced, which has all of the functionality you need to raise invoices? So Xero, QuickBooks, very good. Whether or not you need the external system is something that you need to review yourself. It depends how you work. If you have a complicated electronic point of sale system, then maybe the external system is
that's probably necessary.
Is required.
And then you've got an integration into your accounts. I think that where this is an issue is where somebody sets up a business and they set up the sales process first, and then they change their accounting system, say a year or 2 years down the line, and that creates this dual billing system or this dual billing process where you've got invoices going out of one system and have to be replicated in another. When we take on new clients, we often find that both systems are still in place because they don't really understand yet how to use the sales invoicing in the existing system. So it gets further and further out of sync and it gets more and more messy. And then they find themselves needing to do something like a bookkeeping bootcamp to bring everything up to date again.
And that's usually the one that pushes their credit control out of sync, because all of a sudden
absolutely.
they don't know who owes them what.
Yeah, and they've got no cash in, and they don't know who to chase, and and it all just spirals. It gets quite sort of messy and complicated then, doesn't it?
Yeah. So part of the problem is not having all of your sales up to date. The other part of the problem is not issuing the sale in the first place.
Yes.
So it sounds almost ridiculous, but it does happen.
It's really, really common. It's a major issue. And we kind of touched on it a little bit yesterday, but Carrie's going to talk about it some more today. It is so important to bill for what you've done.
Yeah. Basically, if you don't bill for it, you've basically just gifted them whatever you've done. So sale is a gift to see what it's paid for, but you can't be paid for it
if you
haven't raised it. Yeah, exactly. So make sure that you are invoicing for everything you should be invoicing. So maybe you're perhaps not tracking your time. Maybe you're not quoting for all of your services. Maybe you're not tracking any additions, any expenses that you need to recharge. Now, Xero and QuickBooks do have a function for quotes. In QuickBooks, it's called estimates rather than quotes. In Xero, it's just called quotes. So you do have an escalating process. So you can start off essentially provisionally invoicing your customer, say this is how much it's going to cost, without committing it to your account system. And then that way, if a customer does say, can we have this bit tweaked, at least you haven't committed a sale and you don't have to raise a credit note and edit it and all of that. It's a bit more simplistic because you haven't yet committed to it.
Well, if you've quoted for it properly in the first place,
You
then you shouldn't need to, and you should be able to raise a quote, get the quote accepted, and then bill after the work is done. If somebody then asks you for more work or to rework something or to change something, if it wasn't in the original quote, you've got a better chance of being able to then A, remember that you've done it, and B, quote for the price that needs to be covered to make sure that you get paid for the work that you're doing. So what we see with many new clients or people who are behind on their accounts is that they haven't quoted, they haven't raised the invoice, they're not entirely sure what they should be billing or quite how far out of sync they are, and therefore they just don't do it. So they're trying to catch up with their accounts, but they end up catching up and they undersell or they underbill, so they miss out on some of these really important sales that they've made, but they've forgotten about because they haven't tracked them properly.
Yeah, and it's quite a difficult discipline to get yourself in the mindset of doing.
Very much so.
I don't know why there seems to be some sort of fear factor with worrying about invoicing for items outside of scope. But the reality is, if they're outside of scope, it should be a separate billable service.
It should be, but it's difficult to have that conversation with the client after that's done. So the best time to have that conversation is beforehand. So when somebody does say, can I have this? Can I have that? Instead of saying, yeah, sure, I'll just do that for you, what they need to be saying is, that's fine, let me quote you for that. And then going back to their account system and raising a quote or an estimate to make sure that goes out the door. Then, of course, that means that that's covered. Because the other challenge that we find on this side of things is people have quoted in email, or they've quoted verbally, or they've promised to do something for a price. But when they're trying to catch up with their accounts, they can't find it, they can't remember it. And so they miss out on that income. And then the worst thing of all is they don't bill for it because they get embarrassed or they think it's too late. And
actually that leads on quite good to the next point, which is if you do say quote by email and all over the place, etc., you need to put in place a consistent process.
Yeah, absolutely.
So really consider your sales process, be it as from the perspective of the business owner or the bookkeeper. Sales processes are really, really useful either way, because that way you've got the escalating process. You can do a quote, you can escalate it to an invoice awaiting approval if you've got someone else higher up in management that needs to review it, and then you can commit it to your accounts as a finalized authorized invoice. So it's really worth reviewing your sales process, work out how you're tracking the time, how you're tracking the services, how you're tracking the costs to recharge. Don't want to miss any of those, because that's essentially just lost. That's basically just cost center, actually, if you don't recharge for it at all. So really, really worth considering reviewing your sales process. So we've got a load of yellow stickies.
Yeah,
we've got a lot of yellow
it's
stickies.
the easiest way,
around.
isn't it? Just yellow stickers all over a desk or on a window or something. Map your sales process, pick up everything that you've learned whilst you've been going through this process of trying to fill your backlog and bring your accounts up to date. What works, what doesn't work, what was your pain point, and why don't you ever want to have to go through that update process again, and eliminate all of that by putting new processes in place. And the final point on sales has to be, if you find services that you haven't billed for and you've forgotten about, don't write them off. Don't think it's too late to raise those invoices. Raise them, send them out with a huge apology and just say, terribly sorry, I messed up. I forgot to invoice you for X, Y, and Z. 9 times out of 10, your customer knows damn well you've done the work and that you probably haven't invoiced, and they're just waiting for the bill. Other times they'll just say, yep, fair enough, and they'll just pay it. So we very rarely see people quibble over late billed services. You might be a bit embarrassed, you might have a bit of a raised eyebrow, but generally people will get paid. So don't leave that profit on the table.
Yeah. And there are actually some customers out there who will prompt you to raise an invoice.
Yeah.
Some of them are really, really helpful like that.
Yeah.
Others of them will be a little bit more quiet. So it's a balance.
It is. So let's look at purchases. This is by far the biggest issue we see when we are looking at clients who have messy accounts and their accounts are outstanding. They don't know what they're doing. Got this huge backlog. So we covered the bank transactions yesterday. So we've got all of our bank transactions posted. So you've probably got, both on your sales side and your purchases side, a whole load of payments on account that are not matching any invoices. So we've just gone through the sales. So hopefully your sales ledger is all nice and tidy. So then we need to do the same for purchases. Now, I would do sales first if you're bringing your accounts up to date, because it's generally easier and more time consuming or more time efficient to do your sales first, and then you can get onto the important task of then chasing any unpaid invoices and getting your credit control working. The purchases does take longer. It is more fiddly, and you've got invoices coming in from all sorts of different sources. They could be coming through in the post, they could be emailed, they could be receipts that you've bought and stashed away in your bag, your pocket, your coat, whatever.
Down the side of the van.
Down the side of the van. Builders are classic for putting in the pocket on the side of the van, and they go into the door and then they never come out again. So what do we need to do? We're going to review our aged payables, and we're going to check all the payments on account that we posted when we reconciled our bank transactions. We're going to chase suppliers for all of our missing invoices, and this is where the payments on account are really, really helpful, because you can see that you made this payment in April, May, June, and you've got, say half of them allocated to invoices and half of them aren't. So you know what transactions need their underlying invoices, so that means you can chase for those.
Yeah, and you can see a pattern in it as well.
Yeah, absolutely.
If you've got a load of repeat fixed sum payments, say £500, £500, and then you've got a really specific amount, you know roughly what you're looking for. Whereas if you're looking for a £500 payment in the bank account, it doesn't really make much sense.
And you can then ask the supplier, if you've made this very specific payment, what invoices does that specific payment cover? So we've done that when we're bringing clients' accounts up to date. So you could also ask your big suppliers for an activity statement, say for the last year or the last 6 months, depending on how long it's been since your accounts have been up to date. Don't be afraid to ask for the supplier statements. Most suppliers can produce those at a touch of a button. So also then we need to go through our inbox, and you can do a search on invoice, just the word invoice, and that will help filter out some of the transactions in your inbox that either have attachments or might be HTML invoices where it's embedded into the text itself. Now they're a bit more tricky to find. What I do, or what we do when we look at an accounts inbox for a client, is we'll often filter on invoice with attachment, and that helps to identify an awful lot of these missing bills. Now then you can either auto forward them into your account system or auto forward them into whatever tool you might be using. We'll talk a little bit about those in a minute, and push all those out of your inbox. Now what's really handy in the inbox is to have some kind of checking system, so either a flag or a tag or something, so that you know that that invoice has been processed. It's really important, or certainly I think it is, to know that you've dealt with that particular invoice. So it could be, if you're using Receipt Bank, you've got the auto forward set for that invoice to go into Receipt Bank, so you know that one's been dealt with. So if you've got three invoices in your inbox and you can see that 2 have been forwarded and 1 hasn't, then you can forward that on to whichever system you're using to bring those invoices into your account system. Now if you've got piles and piles of paperwork, sort them all out, sort your invoices all out into different piles, and then you need to decide what you're going to do with them. So we recommend scanning all invoices into your account system so you have the full audit trail at your fingertips. And there are different ways of doing that. So you could use Receipt Bank, for example, which is a great tool which allows you to take pictures of the receipt or the invoice on your phone if you've got a paper copy. It allows you to auto forward or manually forward emails in your inbox with PDF attachments, and it'll pick the invoices up from there. Or you can download all of your invoices or scan them into a folder on your computer and have Receipt Bank pick those up and drag them into Xero or QuickBooks. So that works really, really well. The downside of QuickBooks is it can be expensive, especially if you're doing a backlog, because the billing is based on the average number of transactions over a 3-month period. So if you spike it, then your invoice spikes.
Just to quote, we meant Receipt Bank, not QuickBooks at that
Yeah,
one.
sorry, Receipt Bank.
Yeah.
So with auto entry is another tool, and auto entry also allows you to take pictures or to auto forward or forward your email PDFs into the system. Now auto entry is cheaper, but it's a little clunky. So if you've got multiple users using auto entry, they can see the invoices that other people have put through. Now that works well if you've got people who are allowed to see that kind of data. It doesn't work well if you've got, say, 2 or 3 people working for you. Say you're running an event management company and you've got 2 or 3 people working, and they might put their own consultancy invoices in. So that isn't enough security for that type of company. So auto entry is okay, cheaper, but because it's cheaper, it isn't quite as good.
Yeah, it's not quite as functionally strong, but it's nice. It's nice. To be fair, it's quicker than doing it manually.
Yeah, definitely.
So it is worth using. It's just we would say Receipt Bank's a little bit more user friendly.
Yeah,
a little bit more slick.
And then we've got HubDoc, which is quite new into the market. So HubDoc is Xero's offering. It was an independent and Xero brought it into their family. It's fast becoming our favourite. So it's quite cheap, so it works on the cost side. You don't get charged if you do a big backlog, so that works as well. It doesn't have all the functionality of Receipt Bank, but I think watch this space, and it certainly will over time.
It's got Xero's investments.
So it's got Xero, yeah, exactly.
It's got so much money to go behind it. I wouldn't be surprised if it went and caught up.
Now, the beauty of Receipt Bank, Auto Entry and HubDoc is that you push your invoices in and they do the first stage of double entry for you. So they create, they take the invoice date, the invoice value, the supplier, and they push all that data into Xero or QuickBooks as a draft invoice along with a PDF attachment. So what that does is it saves you time, especially when you're doing a big catch-up with bringing your processing in. So you find your invoice, you push it through to whichever solution you're going to use, and then you forget about that while you go and find all the rest of your invoices. Now there are other ways of getting invoices into Xero. So Xero has Xero Files, which is effectively a file folder that sits in Xero, or you can use the Xero app for invoicing and expenses, which allows you to take a picture of that paper copy and push it into purchases. Now you can also email invoices directly into purchases. So this is where Xero is starting to utilize some of the HubDoc technology, but it doesn't do the bookkeeping for you. It merely brings the invoices in and then you have to process them. So I think purchases are starting to do some of the legwork for you, but it still needs checking and reviewing and bringing in. So there are multiple ways of bringing all of your invoices in to Xero or QuickBooks. You just have to go and find them. So once you've got your backlog in, you can start going through each invoice and checking them, approving them, and matching them against the payment that went out of your bank or your credit card or cash, depending on how you paid those. So we would also recommend that you use an accounts at inbox. So it will allow you to ring fence your accounting and your sort of financial type transactions. So if all of your invoices came into the accounts at inbox and not your inbox, it would be a lot easier to track those and find those. I think you'd find you'd lose less. Once you start to grow your business, you can then give that accounts at inbox to an outsourced bookkeeper, for example, or your in-house bookkeeper, and have them manage it for you, which also saves time and stops you from getting into this same situation.
It also stops emails being hidden off in other people's email addresses.
Yeah.
Am I forwarding this? Yeah, do I forwarding this? Where am I sending to?
Yeah.
At least they can all be sent to the same place. So
It's
really nice.
Yeah, I agree. And one of the biggest challenges, I think, on that side of things is when you find that the invoices are sent to the person who bought or ordered the product or service, but they're not sent to the accounts team. Now, as a small company, that doesn't really impact you because that probably is you. But as a larger company, that gets really complicated when you've got different people making purchases on different cards in different places. It's all coming into different inboxes.
Especially if you don't know who's responsible for ordering it in the first place.
And then you're trying to do a backlog.
Yeah.
So then part of your process for getting your purchases up to date should be to review what you did, review the process that you've had in place in your business in your year to date. What works, what doesn't work, how did you get into this backlog in the first place, and then implement a new process. One of the best things that we can advise for purchase invoices, once you start to get a bit bigger, is to put a purchase order process in place and raise your purchase orders in Xero or QuickBooks, so that then we know, or your accountant knows, your bookkeeper knows, what's been ordered but hasn't had the invoice received yet. So again, it's another way of tracking where your spends go. The last thing I would probably say on purchases is, once you are up to date, don't pay any of your invoices, any of your customers, unless you're paying them from an invoice that is raised in your account system. And the reason you do that is so that you can process that payment and mark that invoice as paid at that point in time, which stops you from having this backlog again and stops you from having payments going out of your bank that aren't reconciled to invoices that are in your system. Now, if you pay people because they're ringing up and they're demanding things, and they're ringing up because they're chasing an invoice, and you pay them because they're calling you, you haven't checked to make sure that A, that invoice has been received, that it's been processed, that you even agree with the charges or the content on it. You're literally just paying whoever's calling and shouting loudest. Now, that causes so many problems, again, with reconciliation and control, and just makes a lot more work for you.
Plus, they're really quick at getting the invoice to you if you're missing it from your records and you haven't paid yet. Not so quick if you've already paid the invoice. Ironic how that works, isn't it?
It is. It's really handy. So if somebody does call you asking for payment, the first thing you need to do is say, "1 moment, please," while you open your account system and check that that invoice is on there. If it's not, you ask them to send a copy of the invoice, send a copy of the statement showing their outstanding balances, and then you pay them later on in the day or tomorrow, once you've had a chance to make sure accounts are up to date and that you've checked what's due.
Yeah, and also you want to check the invoice as well. If you haven't seen the invoice, you want to check everything on it's correct. So it delays it by a couple of days or however long you need to physically get it all sorted. But at the end of the day, that's part of your control process. Now, the other thing I will say is, when suppliers send you statements, sometimes they send it to you monthly. Don't just literally tick file, have a look at it, make sure your accounts actually match, because this is basically your control. 9 times out of 10, if you've got all your records up to date, it's just a case of opening it, compare it to your account system, going, yes, they match, and then filing it. But definitely worth checking. Don't just assume they match because you've got an invoice for the month. There might be another hidden one there somewhere.
I would build that into your month-end processes, because that also makes sure that your management accounts are right, because you've captured all of your costs. So that was a quick 10-10 for 22 minutes, talking about sales and purchases and how to bring those up to date in our bookkeeping bootcamp. So lovely to see you all, and we'll see you again tomorrow. Bye.